I want to introduce the king of volume indicators. Just make sure you watch this video until the end and let's get started. But before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, as you know, volume is extremely important in technical analysis, even in fundamental analysis, because it gives you the measure of the interest level in the market. On TradingView platform, there are many volume indicators and it may be confusing which one is better, but don't worry because I want to introduce one of the best volume indicator in this video. On TradingView platform, here you just need to click on indicators and search volume flow indicator, this one, which is written by Lazy Bear, and you can see that it is a popular indicator on TradingView platform. Alright, this is the indicator, and as you can see, it's added here below the chart. First, we go to the settings of the indicator to make some changes. The author of the indicator suggested that if you use this indicator on intraday time frames, better to set the coefficient at 0.1. Since we are on 1 hour time frame, here for the coefficient, we set it at 0.1. Then here we turn on smooth VFI, so the indicator will be smoother, and also we turn on show histogram, so the histogram of the indicator will also be added to the indicator. And then we go to the style tab and we increase the opacity of the lines and the histogram so they will be better visible on our price charts. Alright, we're done with the settings of the indicator, and now let me show what we have here and how you can use this indicator for trading. But before that, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to the indicator, this green line here is VFI, volume flow line, and the orange line is signal line, which is exponential moving average of the VFI line. VFI is calculated based on OBV, on balanced volume, which is a very popular volume indicator, especially for tracking smart money. This indicator actually turned OBV to an oscillator and made it like MACD, similar to MACD, which we have MACD line, signal line, and a histogram based on them. Here we have VFI line, we have signal line, and a histogram based on them. Unlike OBV that shows cumulative amount of volume, here we have an oscillator that moves above and below the center line, which is 0. So here the position of VFI line below the center line or above the center line can help us with the current trend of the market, just in a similar way that we interpret MACD. And then we have the signal line, the orange line, which is an EMA of the VFI line. And by the help of this line, we can evaluate momentum changes. Similar to MACD, when VFI line crosses above the signal line and stays above that, this shows we have greater upside momentum, so the price is probably advancing. And when VFI line crosses below the signal line and stays below the signal line, this shows we have greater downside momentum, and so the price is probably declining. Similar to MACD, these crossovers of VFI line and signal line are reflected and shown here. When VFI line crosses above the signal line and stays above that, we have the histogram above the center line, and when VFI line crosses below the signal line and stays below that, we have the histogram below the center line. Alright, now let me teach you how this volume indicator can help you in your trading strategy. Similar to OBV, which we identify divergences to track the smart money, here also we try to identify divergences that actually show that behind the scene something is happening and the volume is building, so we can know when the smart money is actually active regardless of the price movement. For example, here you can see that the price was in a downtrend, making lower highs and lower lows, and here you can see that the price made lower low, but when we check VFI, we can see that the VFI line didn't follow and it made higher low. This divergence shows that the volume is building behind the scene. This divergence shows that we have increased buying volume because you can see that the VFI line made a higher low. As I said, because here this is an oscillator, so the position of the line, the VFI line regarding the center line, can help us with the direction of the volume. And here this divergence is telling us that although the price declined and made lower low, but behind the scene the buying volume is building for a reason. These types of volume building is usually from institutional traders, which with large amount of capital they enter in the market and create significant changes in the direction of the price after that. In this case, you can see that here the downtrend ended and the price turned to an uptrend. Of course, we don't enter a trade here only based on this divergence pattern, because these types of divergences can also happen during the pullbacks. After a bullish divergence like this, we can have just a short advancing of the price and then turning of the price and declining in the direction of the prior trend. As I mentioned at the beginning of the video, price action and volume should be analyzed together to completely understand what is happening in the market. One way of confirming a reversal like this is breaking of the structure of the prior trend. Here the price was in a downtrend, creating lower highs and lower lows. When we have a divergence like this, we mark the last lower high and we wait for breaking of this level. Why? Because when the price breaks this level and closes above this level, it shows that the structure of the downtrend is already broken and we have higher probability for the price to turn to an uptrend. So in practice, you can see that this level was broken here and we could enter a long position at this point with the stop loss below the last lower low, and you can see how the price turned to an uptrend and advanced up to this point, creating a very profitable position here. This was a long position setup, and now let me teach you a short position setup. Following this uptrend where the price was making higher highs and higher lows, here you can see that the price made same level. This same level itself shows that the uptrend has a problem because the price couldn't make a higher high, and this shows weakness in the upside momentum. Then when we check this volume indicator, we can see that the VFI line made a lower high. This is a bearish divergence, and this shows that we have considerably higher amount of selling volume, although the price is just showing a same level. This selling volume is building behind the scene, and this gives the probability that the uptrend is ending and a downtrend is probably going to happen. But as I said, we don't enter a trade just based on this divergence, because we can just have a short decline of the price, which is in the form of a pullback and then again advancing of the price. We need also price action confirmation. We mark the low of the divergence pattern and we wait for breaking of this level, because when this level is broken and we get a candle closed below this level, it shows that the structure of the prior uptrend is already broken and we have now higher probability that a reversal is going to happen. So in practice, we could enter a short position at this point with the stop loss above the previous swing high, and you can see how the price turned to a downtrend and declined down to this point. Please pay attention that this indicator or this price action method or any other trading strategy will never give you 100% guaranteed signals. Losing positions are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it is one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.